Welcome to the virtual office of Creedle, Jones & Alga. I'm David Alga, a member of the CPA accounting team. Today our topic for discussion is the establishment of a small business. There's a growing interest in small business and how to structure the new business venture for legal and tax purposes. While I cannot address the legal issues, I can discuss the various types of organizational structures as it relates to taxes. Basically, sole proprietor is a term that refers to a single person entity. Typically, someone starts a business without registering with the state. The income of the business is reported on Schedule C of the individual tax return, Form 1040. A partnership is an entity of two or more business partners, typically individuals, but could be other types of business entities. The partnership registers with the state of Virginia and files a Form 1065 as a separate tax-paying entity. Finally, there's a corporation. A corporation gets its legal authority from the State Corporation Commission and files a separate Form 1120 for tax purposes. Regarding the taxation, let's dive deeper into the taxing of an entity's income. Under the sole proprietor entity, the net business income is taxed in two ways. First, the income is subject to personal income taxes at your personal marginal tax rate. The net income is also subject to Social Security tax. The combined tax rates of these two factors will amount to a minimum federal income tax of approximately 28%. Partnerships file a separate tax return, but all income flows to the partners. Any active business income will be taxed at the personal level similarly as a sole proprietor, including both income and Social Security taxes. Corporations, like partnerships, file separate tax returns, but unlike partnerships, the corporation pays its own taxes. The minimal federal rate is 15% and increases on a gradual income tax scale. While the net income is taxed at the corporate level, any distributions to owners would be taxed as a dividend, but at the personal level. Therefore, there is double taxation on these distributions, as the dividends are not a deductible expense for corporate income tax calculations. To assist taxpayers in avoiding this double taxation, the IRS has created a corporate option for small businesses known as the Subchapter S election. This election allows for the net income of the corporation to flow directly to the small business owner, with the corporation's income being taxed and paid by the individual owners. We will continue with our discussion on business structuring in a Part 2 video segment, where we will highlight the advantages of selecting a limited liability company as an entity type. If you're interested in learning more about various business structuring, then please contact a professional at Creedle, Jones & Alga through the website, Facebook, internet, telephone, or personal visit. Creedle, Jones & Alga will be happy to discuss this issue as well as any small business question that you may have. Thank you for your interest and virtual visit to CJA today. We look forward to working with you as you strive to meet your financial goals.